Global financial markets are bracing for the first Federal Reserve rate hike in nearly a decade. It is a big day, and the Fed is expected to lift short-term interest rates to a range of between 1/4 and 0.5%. The central bank projects a series of increases over the next 3 years to more than 3% in 2018. CBS News business analyst Jill Schlesinger is here. Jill, good morning. Widely expected this is going to happen. What's going to be the impact to our economy?
Well, the good news is if you're a saver and you have been suffering for so long with low interest rates on your savings, checking, CDs, you are going to slowly start to see those rates creep up. That's especially good news if you're a retiree and you don't like risk. So great news for savers. Borrowers, the news is not as good. You're going to see increased costs for credit cards, auto loans, any short-term loan like an adjustable rate mortgage. Theoretically, I think longer-term mortgage rates also will be heading higher. So borrowers, not so good. Investors, hang on. It's going to be a bumpy ride.
But the key issue in the economy is growth. Will it help growth or not?
Well, you know, the Fed has kept rates this low for this long to propel growth. The idea of a rising interest rate is usually something that might impede growth. That's the worry.
Or impede inflation.
Or impede inflation. Right now, we're growing at about 2.25% annualized for the last few years. That's subpar. It's not great. But the Fed thinks after 7 years of rates at zero, it's time for the patient, the U.S. economy, to come out of the emergency room and walk out of that hospital on its own. No more help.
Yes, I don't need the chair. Thank you very much.
Exactly.
But when you sat down, Jill, you said, listen, this is like the Super Bowl and the Stanley Cup for me today. You said you were so excited. So why is this happening now, and how can you get others as excited as you?
I don't think I can, so let me start with that.
Okay.
I think that the reason why it's exciting for me is it's the clearest sign that the recovery process is sort of at the end. We're now entering a more normal economy. It's not great for everyone. There are people that are still out of work, but we are no longer losing hundreds of thousands of jobs every month. We are not seeing the economy shrink. It's time to normalize policy. I'm excited for today.
I can tell. Thank you, Jill. You look nice, too.
Thanks.
Thank you very much.